All right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar, and as I was mentioning in the on the F.A.C.E webinar just a minute ago, you know, the public webinar, I just wanted to say you got to be careful being short down here. I know it's very enticing, but you know, I wouldn't be surprised because it's that kind of market we're in where we just kind of get squeezed. You know what I mean? I think you just have to be really careful. And you know, you heard Dale. I go, what would you do today? And you know, he's like, oh, I'd just be short. And I'm like, unfortunately, I think that's the answer from a lot of people. You know, like, why not? We're below the trend line support. Why don't we just get short, right? And I'm worried that attitude in the markets, it is going to get a lot of people in trouble. You know, people going, oh, look at this breakdown. Oh, it's not just stocks. It's every other market. And it's crude. Man, I should be covering my crude. I actually should. Since if you guys are in the chat room, you would know I'm not short crude. Okay. I'm not short crude, but I was shorted US dollar Norwegian krona as a proxy. And I told everybody in the chat.
You went long that, not you shorted. You went long dollar Norway, right?
Yeah, I went short Norway.
Yeah, you went short Norway. Yeah, exactly. Sorry.
Yeah, I was short Norway, long dollar NOK.
Yes,
yeah.
yes.
And I said in the chat room, I'm like, I'm not shorting crude. I'm actually going to be shorting Norway, long dollar NOK as my proxy. That's what I said in the chat room. And I covered my dollar Norway longs this morning, and I should have probably just taken the crude off at the same time. But you know, overall the wedge is still bearish. I think that, you know, I moved the as you can see, this is probably going to be the downfall of it all. I moved the invalidation level to 65 level, which is actually the breakdown point. And probably what's going to happen is going to move right to the invalidation level and then roll over and then continue on to the 200-day moving average. I'd almost guess that happens, because that happens a lot to me when I move these invalidation levels, you know. But we'll see what happens. But anyway, I'm going to get through the charts because it is my son's birthday today, and he's going to be waking up very shortly. So I want to be there for him when he gets up. So I'm going to get through the analysis, and we're going to go through the charts. So let's talk about the euro stuck at 117. So the euro is stuck at 117, and there's a huge options expiration rolling off in about 40 minutes. 50 minutes. Yeah, about 40 minutes. So, you know, what I would be really thinking here as far as well, first of all, here's the dollar index. So just realize the dollar index is breaking out. Now, the reason why the dollar index looks like this and the euro doesn't is because the dollar is moving against everything else. Look at the dollar against the sterling. It's at lows. You know, the Aussie is, you know, recovered, but still weak, you know. So the euro probably only going to sit here for a while, but I would say while it's below 117.40, it is bearish. And the targets for the euro, 116.57, then 116.05. So, and the 116.05 level are these lows from back here. So just so you guys know why that's a target, because there's no fib level there, right? At least none that I have down. So I'm going to write, I know we can write down 1605, but it's really 116 and 116.60 basically. Okay. Sterling, weak. And we're at the 78% retracement right here. Also, these lows from over here. So if you reading the analysis, end of day analysis, we close below blah 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 blah, puts the 136.70 support to the test next, where that was 2 days ago. We're there. That's because these are the lows from back here in 2021, early 2021, excuse me. Okay. 78% retracement. So this is all very important support. I have to write it, even though we're 10 pips above it right now. I have to write it because the next level support, I mean, the 88% retracement may hold, but I doubt it. So it's 35.75. So 135.75, 130. Sorry, guys, I got the yawns today. Oh, shoot, I did not want to do that. 135.75, 136. Okay. 136.60. Resistance now is going to be 137.20, right? I have an order to sell the Kiwi, just to I'm going to let you guys know where that's at just here in a second. So here's the Aussie. So regarding the Aussie, we have to be able to sell this on rallies. The question is, where can we rally to? That's the question I'm asking. So if you look at this, let's go back over to the daily chart really quick. All right. And you're like, daily chart? Why are we going back to the daily chart? So the maximum extension of this triangle target was there, 72.30. So the reason why I mentioned that is because what you'll notice is we stopped there. See this right here? We stopped there and really sat there for a while, for like half a day. So that should be resistance on the way up. It is bearish. And support now, I mean, we can write the overnight low. I don't see any fib levels there. I'm sure there's something there. I mean, it's probably the 88% retracement of this move, I'm assuming. Really close to. Hold on. Yeah, it's close. That's at 71. So it's hard to figure out. I'm going to write 71.50 for now. And then below that is obviously 70. So by the way, once we start getting really close to the 70-cent level, I'm actually starting to think I want to be long, not because I really want to be 71.50. Not because I want to be long. Like I think that, well, actually, let me take all that back. The dollar, the Aussie dollar, I'm going to just give you this long-term view really quick, and then I got to get through these charts. So I think this is a generational low. You've heard me say on occasion, I hope it comes back down to 70 cents. I want to be long. I actually do. What scares me a little bit right now is what happens if stocks get pulverized from here, you know? I don't know if that 70-cent level is really going to hold up in the Aussie. I don't know, but I think it's at least going to be a good tradable bounce area you know, like the bear flag completes at like 70, 75. There's so much support down here. I've got to take it for a long when or if we get down to 70 cents or 70, 50, 70, 30, somewhere down there. But it scares me that it's where we're at and stocks have barely even moved. What happens if stocks actually move? You know, that's what I keep asking myself. Kiwi. All right. So Kiwi hit the 127% extension of this move. Thanks to RBNZ. So now any move back here is a short. So 68.75 or 68.80, excuse me. That's where I have orders to sell, just so you guys know. This has to hold. Support. Right here. So let's call it 67.90, or else we can call it 68. By the way, one of the guys that are you guys all listening in? One of the guys that one of the guys I used to trade with, he was just mentioning there's huge options expirations in the S&P. The big strikes are at 4450 and 4500. They're far away for right now, but you know, you just think about that, like, you know, we can if stocks bounce today back above 4400, people are going to start targeting that 4450 target, right? Or options expiration, which is way back up here. And I know you're probably like, there's no freaking way we're going to get back up there. But I have to remind you what market we're in. Right, guys? I mean, okay. Canadian. So we're at the 88% retracement. Obviously, 128.15 is or 128. We'll just call it 128.15. That's key. We turned bullish when we broke that 618, right? So that's big. That means this is going to be big on the way down. 126.50. We stay above that. It's bullish. Now, I hope the dollar Canadian dips today. I really do. I hope it does. I don't know if it's going to, but I really hope it does dip today. Because I want to be a buyer down here versus a buyer where we're currently at. Dollar Swiss stuck 92.91. You guys have fun trading that. Dollar yen or dollar Norway, sorry. Gartley complete. That doesn't mean, okay, how many of you guys know harmonic patterns? How many of you guys know harmonic patterns?
Not me.
Anybody out there know harmonic patterns? Do you know what butterfly? You know, shit! I just gave you guys the answer. What did Gartley's turn into? If a butterfly breaks out, or if a Gartley breaks out, then it turns into a butterfly. It could turn into a butterfly, which would be basically 161% extension, which is this move, to 361% extension, which would be that move. So our target would basically be something like that on a breakout. Now you're probably thinking, oh, there ain't no freaking way in God's green earth that's going to happen. Oh yeah, if the S&P sells off 5% from here, I can almost guarantee you that's where we're going to be at. So Lorraine says Gartley turns into a caterpillar first, then a butterfly. This is true. You know, we get all these caterpillars where I live, but they're not butterflies. Unfortunately, they're moths. Look at the S&P's breaking higher. Sucked everybody in. Sucked everybody in short, didn't it, Stelios?
No way. We've never seen that before.
Never,
ever.
So I'm going to write down 902 and then 910. I got to write down both. Sorry. 9.02. 910. Support will be any dip back down to this trend line, which will be now 887. Oh, I'd be a buyer down there again. Dollar MEX. Hey, look, range highs to 2025, and support will be any dip back down to 20. Imagine that. Okay. 20. And you guys are probably like, oh, Blake, you're not going to make it bullish. Absolutely not, because it's not. Dollar Norway is, but not the dollar MEX. And I was long that overnight. Just, you know, so somebody asked me, or somebody was, I forget, we were having this conversation about biases, and I'm going to give you, I'm going to tell you why this matters. And I bought the dollar Mexican peso and the dollar Norway last night. I bought them both. Notice where dollar Mexican, what does dollar Mexican peso say? Range. And look at what the dollar Norway says. Bullish. Do you want to know something interesting, Stelios? Since you're listening, and I don't know if Steve's here yet.
Yeah, he's here too. But yeah, go on.
My P&L, when I closed them both out this morning, I made double the amount in Norway than I did in the peso.
Wow.
Do you know why? Not only was it up more than the dollar MEX overnight, but I had a bigger size position too.
Yep.
Why did I have a bigger size position in Norway? Because I know this right here. If you guys know this is my bias, then you, right? Does that make sense? I don't know if that may, somebody was telling me, hey, I'm an intraday trader. This should be bullish, and this should be, it's like, no. You're not understanding how I use the biases. Like, I can get long the euro right now. I'm not going to, but I could, even though it says bearish. I just know if I get long euro, it's going counter trend and I need to take a smaller position. Being long the dollar MEX and being long dollar Norway, I was more aggressively long dollar Norway last night because I know it's in a bullish trend. All right. Anyway. Dollar yen. We're still range bound. Hope you guys are having fun trading that, because that does not look like any fun to me. I know we've been writing down 110 as resistance. We overshot it in Asia. Is it in Asia? 4 hour? No, I guess it was just late in the day yesterday. We overshot. So now we're gonna have to just do 110 support, or I'm sorry, 110.30 support, 109.20, and that's it. Dollar index. There's your breakout point. So 93.20 is now support. That's key. That's got to hold today. I hope we test it. Hold on. Let me do this. I want to know. Because if we get back down there, I'm going to probably buy the dollar against a lot of different things. Just saying. Resistance 93.64. S&P. All right. That overnight low is very important now. 43. Let's just call it 43.55. Very important. While we're above that, you have to stay bullish. I know you're like, what? Do we got to stay bullish? What? Yeah, we do. Let's not forget what market we're in. Let's not forget that dips are bought and false breakdowns are common. Resistance for the S&P is going to be interesting. So I think we should probably we're going to find resistance up here now, because you can see this is previous resistance. There's a lot of support there. I am going to redraw that. So here, there we go. You see the highs, high, low, low. So this zone here, I'm going to call it 44.20 just to call it in the middle of that, but that is resistance now ahead of 44. And since the my friend at Gellos, he just said there's a huge barrier at 44.50. I might as well put that in there too, just in case things get a little, short squeezy. Gold resistance, right? It's big, 1800. Might as well just ride it, just keep it at 1800. And while we're below that, you got to be bearish. Support. $17.60. I think there's support ahead of that, but it's minor. This is major. Major. Support. Basically 23. Not major. Bitcoin. Well, we're above 42.5. Major. That's bullish. 48K. That's key because it's a 618 retracement. So that would be major. Okay, done.
I got it.
I quit.
You quit.
I quit for the day because I'm going to go wish my son a happy birthday.
What happened with the, happy birthday. Yes. Is that Roman or Christian?
Christian.
Christian. Yes.
Yeah.
How about the tree? Is the tree okay? Are they down?
Tree, well, put it this way. We have two big trees. Now we have two gigantic stumps. And there's so one of the benefits of living where I live, just so you guys know, we pay taxes, obviously, a lot of taxes, but we have every month our city comes by and picks up bulk trash, right? So we can put stuff out on the, it's just an effort, local effort to keep our city beautiful. I live in Scottsdale, Arizona. It's a very pretty desert city, right? There's not a lot of junky stuff around. It's everybody upkeeps, a lot of homeowners associations, meaning that you have to upkeep your home in the area. It keeps the area looking beautiful. All right. Unfortunately, when the city does pick up for free once a month, anything that you want to throw out on the curb, they'll, you set it out there a couple of days before they come, they haul it all off, right? You got an old refrigerator, stick it out there, they'll haul it off. They'll get rid of it for you. So things don't accumulate. Well, they do that for brush too. So, once a month you can clean up your yard and get put out all these weeds. Well, we have exceeded the amount of tree stuff we can put out there for the month. So it's going to take me a couple of months because these trees are 20, 30 years old. They're so big, and we removed both of them in our yard because they both started to fall and uproot, that it's going to take months for us to get all that debris out of my yard. So yes, the short answer to your question is trees are gone. Long answer is they're kind of gone. There's still a lot of stuff in our yard. It's again, big trees that have been here for years. And the problem with living in the desert is it's so dry that the roots, they don't grow really deep because the ground's not super moist, right? So when these big 80, 100 mile per hour winds come through that we're not used to getting, they'll uproot big trees because their roots aren't super deep. So anyway, Tom asked, how's our water situation? Not good, because it rains where I live, but it doesn't necessarily rain in the up north by the Colorado River, where like Vegas is at. And Lake Mead is the biggest water artery that feeds water into Southern California, Arizona, New Mexico, Nevada, and Colorado, the Colorado River, and it's dry. So what we really need this fall, to answer your question, is we need massive amounts of snowfall and snow cap all the mountains in the Rocky Mountains this year. If that happens, it'll be good. All right, got to go.
Thank you, Blake.
Thanks, guys.
I think Steve's here too.
I am still.
Hello.
Hello, mate.
Okay. Well, not much more to say. Again, most of the action, excuse me, was done overnight and this morning. So we got a little risk-off move, which is now reversing. The S&P's.
Still, can you grab the screen for a second?
Yeah, sure. Hold on.
Thank you.
Let me get rid of that. Grab. Hold on. There we go. Share screen.
Trying to resolve something fast, and in a few seconds I'll be.
Yeah, no problem. So I was going to say risk off a little bit this morning, but look, the S&P is almost unchanged now. It's down less than 0.2%. The DAX is faring worse, but still, we've seen this thing so many times happen over and over again, and unfortunately, I don't think anything's going to change ahead of Jackson Hole. Cryptos are relatively stable for their usual moves. It's once again, it's metals that are underperforming. Gold is performing a little bit better than silver, but again, the market kind of likes to punish metals as soon as there's a hint of we're tapering, or we're doing this, or we're doing that. The record negative real yields don't matter. It's oh my God, rates are going to go up, or they're going to take away the punch bowl. And silver, I'm looking at this. This trade is so nicely technically here. There was this two Sundays ago, right, when the market opened, we got the slam. Silver went down to 22.25. I mean, a foray there again would be lovely, and I am going to buy some there. And you know what? We might break lower. We might take out more longs. Make a nice false breakdown. Maybe even head towards, I don't know, $20, $21. Anything's possible. But make no mistake, in my opinion, I think the bigger move is higher, and that's what I'm expecting. So I'm just trying to load up at as best levels as I can. Commodity currencies are not doing well with the risk of move. Aussie Kiwi down a little bit. Norway is the one that's suffering most. But again, I think if we do get a nice risk off move when the dollar spike, and if the DXY goes anywhere near 95 and a half, I think the dollar Norway might get to 10. If we get to 10, I would love to see that to short it. But at the moment, we're gonna have to wait. We're gonna have to wait until next weekend. The dollar index, I drew this a while ago. I do think we're going lower, but first, there's a good chance we might get a spike. Maybe touch this moving average. I don't know. It's difficult to actually call how much higher it's going to get, but I think there's a good chance of a spike, especially after.
Yeah, the 95 area you're showing is a good one.
Yes, there you go. Yeah, so that's anywhere near there. Following Jackson Hole, if we get there, I think it's a nice level to start getting short. But
yeah, but perhaps we can get a push there. If we get a little bit of a resumption of this risk of move that just started, right?
Yeah.
And post that, we can go back to the usual stocks being bid for any stupid reason, non-stop, and the dollar going back to resuming its.
Yeah, we haven't had any
downside.
Any headlines about US and China, right? We're going to get some more at some point. Oh yes. Trade talks and all that. Yeah, let's buy stocks.
Oh, don't remind me that. You remember remember that saga? I mean, that and the Brexit saga. I mean, one of the positives of COVID is that we stopped having sagas like that stupid one,
But isn't it amazing? We had all this rally and then rally and rally again on the back of phase one. About phase two, and look, nothing's happened. I mean, nothing major has happened.
And if you remember, now nobody's talking about it because obviously nobody wants to talk about it.
Yeah.
Just before the first year, it was last year, right? Because if I remember right, that was signed in 2020. And supposedly it was last year, or I've missed the years. It doesn't really matter. I remember that
It was 2020 because we were talking about that, and then it was Brexit. So and Brexit happened at the end of 2020.
So China was like close to the end of the first year. It was barely at 25% in reaching the targets for what was supposedly agreed, right?
Yeah.
So, I mean, it was a deal that was broken down in pieces. So supposedly they could sign it when it was obvious to anybody that was actually looking and, reading carefully, that there was no chance they would have a whole deal in place. That's why they had to break it down in pieces. So they put everything that was easy to agree on phase one, which is all we got, and even that, was never followed ever. But once it got off the news, and after we got the, numerous rallies, based on they're now going to sign, they're getting closer to that, they're so close to an agreement, and then the opposite counter room was like. That the guy said that it's not happening, etc. But every time the sell-off was like 2%, and then the rally following positive news was a 5% rally, and then negative news, it was a 2% sell-off, then a 5% rally, and we got that, what was it, like 10, 15 times?
Yeah.
And
it never retraces.
Yeah.
It's a bit like oil prices at the gas station. Price at the gas station. Oil goes up.
Yeah.
They go up. Gold goes down. They only go down a little bit.
Yeah, they only go down a little bit with a lag. But the second oil price goes up, the second it does, gas prices go up immediately. It's like they're connected to the financial markets live.
Yeah, exactly.
Yeah.
Anyway, yeah. Okay, I don't have much more to say. Unfortunately, it's still a waiting game for me.
Okay,
So
we have a few things. We have a few things to talk about. Since we got a little bit of a movement, so no complaints there. I'm grabbing the screen. Yeah, I'm grabbing the screen. So there are a couple of things to talk about. One of them, and the obvious, we already talked about it on FaceTime. I'm not going to focus that much. Is that the S&P is clearly testing support here, right? So the significance of today's price action is apparent, right? Now, Blake mentioned that other markets are selling off as well, which is true. In the case of the DAX, for example, we got rejected from that ascending wedge trend line resistance. But as you see, oppositely from the S&P, we're some distance away from the trend line support, right? So some distance away from having an actual major development there. Now, we talked the other day about the divergence in the VIX. You can clearly see here that the VIX was trading above this triangles trend line resistance a little bit earlier, but it has since pulled back to almost close the gap from yesterday, because we did open with a gap. We pushed higher on the day. Now we've turned negative on the day. No, not negative on the day. Negative since we actually gapped higher, but we still have not reached the closing price. We're almost there, right? So I think this trend line resistance is an important one to notice in the VIX. Now the Ftse, same deal, an ascending wedge. We've pulled back within it, somewhat as the DAX, some distance away from breaking down. So, not the first thing that's going to break down. Obviously, the Nikkei is still pulling back within this descending channel. As you see, it dates back to February, right? But clearly, this has been a very orderly type of a pullback. So I have to admit that this move lower in the Nikkei has, nothing worrying so far for the bulls. It's a correction in time rather than price. And, this is probably pointing out to some kind of a bullish continuation, probably sooner rather than later, because I think we've already had a very decent amount of time that we've spent in this pullback. So, we should probably be getting closer to some kind of a resolution out of this. Now, the Aussie is one to monitor here, because now the Aussie has broken down from the bigger corrective channel, the one you see here in blue, right? And it's also testing this steeper one, the red one, which is shorter term on the other hand. We're testing support as we speak. So, this is probably the next area you should be watching a support. But I have to say that, the overall picture now is starting to get worrying for people that are looking for higher prices. Now, I still believe that medium to long-term Aussie and Kiwi are headed higher, right? But if we break down from there, we might be in for a deeper corrective move before that happens. So keep that in mind. Now, Kiwi, on the other hand, is some distance away from breaking from the equivalent channel. We have broken down from the rectangle though, and we talked about it a few days ago. We talked about it again, if I remember right, it was yesterday. And now that we've done this, we have a measured target. Let's see what it is. And we have a measured target down to 67.40. Okay, so rectangles target probably a little bit more. In any case, the rectangles measured target is down at 67.40. Roughly at 67 cents, we have this horizontal support area, the 78.6, the descending channels, trend line support. So nice confluence of supports down there. we might actually need to visit that area. Of course, if that happens, it will most probably mean that the Aussie has accelerated lower towards the next downside objective, which is at 70 cents. You see, this previous congestion area and previous lows are there at the 70-cent area. Now, we talked several days ago about Aussie yen and Kiwi yen, specifically about the possibility of Aussie yen breaking down from this little pennant, which it did, and rather aggressively. The rejection of the Kiwi yen from the channel trendline resistance. Now you see that the Kiwi yen is getting closer and closer to the channel trendline support. So, probably this is the place that you should start getting a little bit more conservative about downside targets, because this channel trendline support might actually put a pause in this sell-off, if not signify a low. At the very least, it might put a pause, right? So keep that in mind. What else? Yeah, having to do now with the rest of the assets. I don't want to say more about the other FX pairs. We covered much of it. In general, you know that I totally agree. I'm looking at this rebound, for example, in the USD NOK. I still have no position in the USD NOK. I got rid of mine once we got a reversal higher, and but I'm still looking to build a full position being short. So I'm patiently waiting for this rebound to be over, to finish unfolding to the upside. Now I'm monitoring this ascending channel. I know it's not like a super perfect channel. We had that overthrow over there, right, at the 20th of July, 2020, 1st of July. But in any case, next upside resistance is at 915, and any proper reversal lower is going to get me on board, but not yet. Now, having to do with metals, since we always go over them, gold has stalled. This rebound in gold has stalled. We're very, very close to the resistance area as we speak. So I wouldn't be jumping the gun buying it here if I was looking for a short term trade. People that are bearish, I would clearly understand why they would think this is a nice risk reward opportunity to be short. Now, personally, you know me, I don't want to be short any of these monetary metals for no reason, simply because fundamentally speaking, I'm looking for them to have a massive move to the upside. Yeah, and yes, I know that technically speaking, this doesn't seem to be the time that this is about to begin. But in any case, I don't want to be fundamentally so wrongly positioned. I don't feel comfortable about it. You know what I mean? So I'd rather trade them only in the direction that fundamentals point to. Now, of course, as always, using technicals for a trigger is the best thing you can do. Now, we were talking about silver yesterday, saying that, irrespective of having found support in this symmetrical triangle trendline support and the $23 level, admittedly, silver still looks very heavy, and that is indeed the case, right? So, having a look at it in the short term, it looks heavy, and it looks that it's very likely to break below this key pivot area. Personally, I would be more than happy to see that happening, because I know that a lot of bullish trades are going to be closed. A lot of bears are going to be jumping all over this, thinking that silver is going back to 15 or whatever else. Personally, for me, it's going to be it's going to be an opportunity seeing lower levels, which I didn't expect we would see. Admittedly, I didn't expect we might see levels below like 23. If you asked me, like when we were trading up there, right, when we were trading like at 27 or whatever, we started monitoring this reversal lower, and we knew that we were still within a bigger corrective move, but I didn't expect it would be easy to see levels below 23. But I'm going to welcome them if they come, because the cheaper I can end up buying silver, the happier I'm going to be, because as I've said before, I own gold, I don't own silver. So yeah, why not? Platinum, palladium, Now, we talked about Palladium. Nothing has really changed still within this corrective move. Palladium is in the spotlight for obvious reasons, right? We indicated in real time the potential breakdown that we had over there, and look at the magnificent follow through that we've had. Now, for the time being, today we seem to have rebounded from this channel trend line support. So yeah, from a risk reward perspective, I would understand why somebody might want to try their luck being long here. But personally speaking, I think it's very likely that any rebound towards 2,500 is going to find sellers. Is going to find sellers for lower prices. So keep that in mind. Now, last but not least, crude oil has, clearly finally sliced through with yesterday's price action, sliced through this trend line support, meaning that there is absolutely no chance anymore that this was a symmetrical triangle. So we're going to the second likely interpretation that this is a channel, and we're going to soon find out if that is the case. Now, if you notice, since this is a descending channel and every single day the trend line support comes a little bit lower, we are just a few days away from passing from this 78.6% fib, which is also this previous low, while the 200 daily moving average at the same time is converging at the same area. So $61.50 is the next big level to the downside. Now we slice through that, and then it's a totally different ball game. I will still be of the opinion that this is a corrective move lower, but then we'll have solid evidence that we're looking at a bigger corrective move lower, which, given the fact that we moved sevenfold higher from 11 to 77, it can end up being a rather strong and deep corrective move, right? But in order for that to happen, we need to see a break through this channel and 61.5. So that's your pivot area to trade it either to the long side or to the short side, depends on how you feel about it, in which direction of the market you want to be, so on and so forth. Anyhow, that's it, what I had to say, more or less. So I'm going to be, as usually, more than happy to take some questions. Let me see, what do you have for me? AA. We haven't had a look at this for quite some time. Is this even significant? It used to be a very significant trendline support resistance area, but clearly recent price action has negated that, right? Now, this corrective move kept unfolding and unfolding and unfolding, and the final form ended up being something like a big pennant. We did break up from it eventually, which makes sense, right? Because the nature of this move had corrective characteristics, any way you looked at it. So it was more than obvious that sooner rather than later we would break higher. Now let's see, what did we do? We didn't do much, right? Yeah, that's a little bit worrying. We fulfilled the minimum expectation, which is one more high. We got that. We moved and closed on 2 separate days above the 44.42 area, which was the previous spike high. And we're now pulling back. Getting to the 50 DMA, I think we'll find out soon enough what kind of a pullback that is. Short term, doesn't seem like it's over, right? So I'd have to say that this looks like it might unfold further. Now the question is, how much further? I can tell you that you don't want to see this go below 31, because that's going to be a super bearish signal, right? By the way, the 200 DMA is converging there as well. So you don't want to see this below 31. That's going to be a super bearish signal. Ideally, you don't want to see this below this previous trend line resistance, right? Ideally, you don't want to see this dip below that trend line. So short term, it looks like it's moving to the downside, as you see. And you know, it's important to notice this kind of things, right? We see that the market in the short term is very weak, because the vast majority of the days since we topped with that spinning top over there, we've actually gapped lower, which means that there is a lot of selling pressure here, right? I mean, investors are eager to get rid of the stock, even with the stock market being closed, right? So keep that in mind. I don't see any signal that you should be buying it here, right? For the reason I just explained. That's what I think. Anything else, guys, gals? Anything else you want to look at? Ethereum. Yeah, so let's have a fast look at the two cryptos, right? They remain very nicely bid. They've had this little pullback, but you know, as long as we stay above 42,500 having to do with Bitcoin, and as long as we stay above $2,500 in the case of Ethereum, these pullbacks might just be short-term consolidations, right? Now, keep in mind, since you asked about Ethereum specifically, 2,900 is also a support level. So we've currently stalled at the first support level, which is 2,900, but the more important support level is at 2,500. So I wouldn't be that worried if you're bullish. I wouldn't be that worried even if we went back to 2,500. Where you should start getting worried is if Ethereum breaks down below 2,500. That's where I would start getting really worried, technically speaking, right? Michael says, Steve, enjoy your vacations. Thank you very much. Take a look at SOXL and GDX. Yeah, absolutely. Let's have a look at GDX to begin with. Okay, here's GDX. And why is this an important chart? First of all, we've explained in the past the importance of this area in the GDX. I'm going back in time so you can see it, right? So you can see the importance of this area, right? 31.5, roughly. Key support resistance area. Now, within that context, I know we're slashing through it as we did over there, right? Also pay close attention to these broken channels trend line resistance, which might act as support next time we test it, right? We had something like this here. So pay attention to that. Now, in the short term, just by looking at this chart, we had more or less something like a rectangle being built here. We broke down below it. That's a bearish development. We back tested the broken trend line support, and we're continuing lower. So looking at it short term, there's nothing bullish about it, right? Admittedly, nothing bullish about it looking at this chart short term. But looking at the bigger picture, in my opinion, you should have very limited expectations about how low the GDX can go. And, you know, clearly the same applies with GDXJ, right? Had this nice breakdown, which had no follow through. We seem to be creating a pennant. We've had this big move lower, but you also need to keep in mind the bigger picture here as well. Look at this vertical move we had prior to that. We've spent a lot more time than we did moving higher, and we've barely retraced more than 50%. So I think we're clearly in some kind of a more complex corrective move here. You know, with the next downside target being the 61.8 at 37.26. Admittedly, though, as I said about the GDX, same applies here. In the short term, there's nothing bullish with this chart, right? So I'm definitely not advocating that by looking at this chart, you should go out there and buy it, because it doesn't seem to be bullish. As simple as that. Not currently. Now, fundamentally speaking, all this should fly, and along with SIL, SILJ, right? Here is SIL. Still within some kind of a big corrective move here. Looks like a big channel. There it is. Right, still some distance. Oh, just technical analysis was very slow to populate, and I was wondering. So let me delete that because we already had that channel in place. So here's the channel. I just need to extend it. And here is what we drew some time ago, right? Back there. We drew all that back there. That, we might get a dip lower towards this area, or worst case scenario towards the channel trend line support. Let me extend it. Since a lot of time has passed, there you go. Nothing has really changed, right? So we've now sliced through this area, and the next area to look for is the trend line support of this big channel. We have a little bit of a distance until we get there, and clearly the same applies to SILJ, the junior silver miners, right? There we go. Some kind of a channel here as well. Still some distance from that channel, trend line support also. So yeah, but I know you asked for something more as well. Let me see, what was that? It was the SOXL. Yeah, we had drawn that. We drew that then. So last time we had a look at it, we were here, somewhere here, right? We found support there, and we've moved higher since. And while doing that, we even ended up posting a new high. Look at this, right? Incrementally, but we did post a new high with a huge RSI divergence being posted at the same time. Look at this. Previous high RSI at 83, roughly. Latest high RSI at 66, roughly. I would be very careful here. I can tell you that much. I would be very, very, very careful here. Now, listen, the bullish case scenario, the bearish case scenario is that this was a false break higher. And the RSI divergence would also say, this is a likely scenario, right? Now, the bullish case scenario would be, oh, this is a rectangle, right? There it is. Bullish case scenario would be, this is a rectangle. We're still oscillating within that rectangle. And eventually, after we spend some time consolidating within it, we're going to resume to the upside. And when that happens, the target for this formation is going to be at $68, right? So that's the bullish case scenario. But even until we get that to unfold, who knows? We might get a lot lower than where we currently are. Now, if you notice, we are about to test the 200 daily moving average again, which, if you notice closely, look at this. Right. In every occasion, we've tested the 200 DMA or, got to about to test it. We found support, right? So, watch this as an initial area of support. And we break through that, who knows, we might easily go back to 28. Respect this 28 to 48 area. I know it's a big one, I know, but as I said, interesting rejection, big momentum divergence, not a type of rejection you can easily ignore, right? Having said all that, we're exactly in the middle of this range at the moment, exactly in the middle of the range, right? So the only thing we have as support here in the middle of this range is this 200 DMA. Now, if this is enough for you, you might even, make an attempt to buy it here. But keep in mind the bigger picture, 28 to 48. We break in either direction, that's going to be a major development, and it should get follow through. Now, currently being in the middle, it's more of a mixed bag here. I mean, I would personally not trade it where we currently are. Natural gas, not much has changed with natural gas, mate. Here we are breaking through 380, right? Almost about to break through 380, and that is if it gets confirmed on a closing basis, on a daily closing basis. That's going to be an interesting development, but we've already said what to do in this case, right? We said that 380 is the first area of support. We slice through 380, then we should be looking towards 340, right? So yeah, monitor if by the end of the day we're very weak and we close below that, look for this correction to unfold further towards 340. My pleasure, Tom. Have a nice day. Coin, and is that Peloton? What is it? PLTR. Let me see. PLTR. No, I don't think that's Peloton. Yeah, it's Palantir. So last time we had a look at it. A lot of things have happened since, but admittedly, we are making an attempt of breaking higher. Now, yes, I know, no real solid evidence. I mean, this trend line passes from just, 2 points. So, that's not necessarily really significant. But, I have to say that this eventually, in my opinion, should resume higher given the prior move and its, its impulsive nature. So, I wouldn't find it easy to fade this. I think the path of least resistance is to the upside. Now, the next upside target is clearly this previous high, which is exactly at the 38.2% fib. Right, so nice confluence of resistances might act as a magnet. I think we might end up retesting 2770, and we see what happens from there. And coin, let's see, that's Coinbase. Yes, that is Coinbase. And I've talked about the issues we have with cases like this, meaning very little price action, previous price action, which is important for technical analysis. But we had already indicated 3 levels of support resistance that are obvious here, right? It was this one, roughly 210. It was this one, roughly 255, and it was this one, just above 300, right? I don't think there is currently a trend. I think these are the levels you should watch. So we broke through the 255 one. This opens the door and even the possibility for another retest of these 210 lows. Now RSI is more or less neutral, as you see. The previous run higher didn't manage to register overbought levels in the RSI, and that is something that would keep me from being bullish here, because the previous move higher didn't manage to trigger the sentiment of a market that's really strong. So yeah, I would remain more or less neutral short-term bearish from what I see here, but medium-term, if you're asking me, I would be neutral here. BIIB and S. Let me see, and I'll wrap it up with these two. BIIB. Last time we had a look at it, I talked about the possibility of either. I said we're going to continue lower. I said we'll either find support in this broken trend line resistance that might act as support, or otherwise, if we break through that, we might dip towards 290. Now, you'll notice that we didn't make it to 290, but the rebound we've had since is definitely not inspiring confidence to the upside. So that would tell me that there is still a very good possibility to see a move towards 290 before higher. Okay. SEDG. Now I'll tell you what the problem with this is. Very nice, clean breakout from this. Definitely that's a bullish development. Break above the channel, back test of the broken trend line resistance as support, continuation higher, right? I have two problems with this. One, the RSI, that's not confirming a very bullish move. Two, the fact that so far at least, this move higher has no impulsive characteristics. So bottom line, what I'm trying to say here is that this is not an unlikely scenario. There you go. Okay. I think this trend line support is very, very, very important. The purple one, the ascending one, for what's happening here. FSLR, that's going to be the last one, mate. Yeah, I have the same problems with this one. You see what I mean with the blue trend lines, right? This move higher doesn't have impulsive characteristics. And despite the fact that I would expect this move to be corrective and continue higher, I don't see the elements of this continuation higher being in place yet. So we might need more, to get more downside, a more complex overall correction, starting, from over there, the high we found towards the end of January, before we're done and we actually can continue higher. Yeah. And if we don't want to exaggerate that, we might see something like this there. Okay, guys and gals, I wish you a wonderful rest of the day, and I'm going to see you again tomorrow. Bye. Bye, Stella.